everybody, and welcome to Financially Fierce, a podcast for young adults by young adults, where we have conversations with experienced adults in the fields like home ownership, credit, and professional development, all to make sure that we get a step-by-step guide to success. With that being said, today we are speaking with Miss Cheryl. Can you tell us a little bit about yourself, Miss Cheryl?
Sure. Uh, I'm currently contracting as an operations manager for a friend of mine's business. However, I've spent about 10 years in the financial industry. I have all of my insurance licenses, life, health, property, casualty. I also have been a registered um, financial advisor with my combined state and federal law investment licenses. And so investing in brokerage. I've been a bank officer. I've helped people set up 401ks, annuities. I've helped several people buy homes. And so I met Ms. Allen. I met Ms. Allen in the 757 startup studio where I'm working on founding my own app. It's a media app. So, um, and it's just all exciting to me.
That's very good. And going based on the on what you just said about you be having several years in homeowning industry, what would you say from your observation are the steps to getting a home?
So, the first step with anything is always a little bit of research and preparation. Okay. Is it a good time to buy? Is it, because we have things called sellers markets, we have things that are called buyers markets. As you know, during the pandemic, interest rates dropped to like 2.65%. It was a buyer's, it was a seller's, it was just a war to buy houses because the interest rate was so low. Now the interest rate on average is up to 7.42. So, oh yeah, but it's still we can get into that later, but always the pre-work, seeing how much home you can afford. And you do that by looking at your income and looking at your debt, ordering your credit score or credit report for free, going through it to check for accuracies and inaccuracies, um, deciding, is it your forever home? Is it not your forever home? Looking around, looking at the neighborhoods. Um, those are kind of like the pre-work. How much home can I afford, and where can I buy the home at? Um, that's the pre-work. I don't want to jump ahead. I can keep talking, but in case you guys have to ask anything, I'll
Yeah.
pause.
And then, so something I wanted to ask about was I remember that you said something about the buyers and sellers market. So, for that, like started from there, I see that you said a buyer's market would be like 2.7, like interest rate. Is that correct?
No, that's not what I meant really. There's going to be times where it's better for a person to buy, where sellers just really want to sell their house and there's not enough buying demand. And then there's other times where there's a housing shortage, and so um, it's seller's market because everybody wants to buy. That's what happened during the pandemic. And then
So
there's
basically, supply and demand.
supply and demand, right? Supply and demand, and it flips each side. When it's a buyer's market, the seller tends to make what's called concessions. They might fix up the house, they may drop the payment, they may pay for part of your closing costs. When
Oh,
it
so they are more likely to help you a lot more with buying the home in a buyer's market than a seller's, or
um,
at least like put more money into the home.
correct, correct. They're more willing to fix up the house or something, throw in a couple of bonuses, but like I said, it'll pay closing costs. However, We got into it being a seller's market the last couple of years because there's been a housing shortage. So they stopped paying closing costs. A lot of people stopped paying closing costs. Buyers were bidding on houses, making them inflating the prices and things of that nature because it was such high demand.
So being with what you said first, I remember you said that you need to know first, am I even in the situation to buy a home? So how exactly will I know what if I'm in a good situation to buy a home, and what are things I should look out for in that process?
Well, sometimes you can go to your local bank and sit down with somebody, and they'll take time with you for free to help you figure out how much home you can afford. A lot of times, if you walk in your local bank, people always just go up to the teller. People don't often go in and set up an appointment to talk with other people in the bank, but usually, I mean, that's typically free. You're just going in and you're asking them. Your bank probably wants you to see if you'll buy your house there. You don't have to, but they can sometimes help you. The first time I bought my house, I was 29, but I had gone and talked to different people before then, maybe a year or two before then, just kind of feeling it out, and they helped me. They explained the process to me. So that's one thing that you can do, and of course you've got Google, and you
Yeah.
can go online and you can play with the different mortgage calculators. Bank rate tends to have one that's pretty easy, and you can manipulate the numbers. But they're going to, of course, they're going to want to, you plug in your credit score, but they can't really tell you your debt to income. There's a few other things that go in there. How much money do you make?
So
How
could you
much
go
debt you
into
have?
a little bit about what the debt to income ratio is?
It's just debt to income. How much debt do you have? How many bills do you have? And what's your monthly payment? And all your income sources. Usually, they want to know. This is actually pretty standard that you've been on the same job for at least 2 years, or at least the same type of position. So maybe you have been the IT manager at one place for 3 years. Then all of a sudden you got a new job because you got a promotion, but you're an IT manager somewhere else. They'll, you're still an IT manager. So they're going to want to look and see that you've been basically in the same role for 2 years.
Okay. So it's not just you consistently having a job. It has to be similar to you having a similar role as well.
Yes, well, it's either 2 years at the same place or yes.
Okay. And then, like, are there any type of assistance programs that you can get as a first time buyer? And could you go about how to find those resources?
So there's some standard ones here in Virginia, the HDA. You take a first time home buyer class. And so, depending on your income, you might qualify for an extra stipend as a first time home buyer where they might give you a couple $1,000s. Also, in Virginia, they have some other down payment and closing cost grant programs. There's different banks and different mortgage companies. Um, I helped a friend of mine, I helped several people use grant programs. And my friend got like $19,500 towards closing costs and down payment. And a lot of people think that it's fictitious, but it's actually real. I know I've helped a dozen people or more use the grant programs to buy homes.
So, would you say when I'm trying to buy a home and I'm trying to see where my financial situation is, should I also try to calculate the grants and the different programs into what I have in order to pay for a home, or would that come later in the process?
I would put that as later in the process. So let's say you want to buy a house and it costs $350,000. It used to be you could put 5% down. Okay. During the pandemic, when people started defaulting, it started going up and down between 10 and 20% of what a bank might want you to put down on a home based on your credit history, income, credit score. And so if house is $350,000, 10% down. That's $35,000. Okay.
Okay.
And you may need it all, you may not. 20%, $70,000. So that's just going to put a little dent if you get any of that, the down payment assistance or closing cost assistance. But I mean, any money that you get, grant, you do not have to pay that money back. They
Okay.
do require that if you use one of those grants, that's going to be your primary residence for 3 years typically.
Okay. And so if I'm going about trying to apply for these different grants, should I just do research on all these different places I can get them, or is there specific places I can look for in the beginning to find
So
these?
you would certain financial institutions, because really the money's passing through from the government, from the federal government, in some form, some capacity, um, 9 times out of 10. And so when that happens, it's just certain banks and certain mortgage companies that offer them. So you can just call. And I here in this area, I know it varies area to area, because I know you're streaming all over the world, or all over the U.S. I don't want to pigeonhole, but I know here in Virginia, Bank of America offers one, Tidewater Home Mortgage, OVM. Um, so there's a few banks that have them, but you have to ask. And
Okay.
um, it's typically the same application. It might just take a little bit longer for all the approvals.
Okay. So next, I just wanted to ask about, because you mentioned mortgage, and so that's something I know that is a part of the home buying process. But how exactly is the pre-approval process? Like, what is the process exactly?
So I've bought a few houses over several years. I bought one at an auction. Um, I went through the traditional mortgage process on two, and on another, I bid off of a HUD website. So it was a foreclosure that needed repairs. But all of the processes, except for the just buying a house from an auction, whenever you're going to a lender, they're going to start the same way. You should be prepared to have a full month's worth of pay stubs, at least 1 to 2 months of pay stubs. I always create a zip drive folder. I always create a folder on my computer and just drop them all in there because I know that's what they're going to want. So get your pay stubs together. Sometimes it'll be a link and they can contact your job, but it's just easier to download the pay stubs. Have your identification. They're going to want a copy of your legal ID, your passport, your military, your driver's license. They're going to want that. Scan that, drop that in there. If you're renting, they're going to want to see typically a year's ledger from wherever you're renting from. Okay. They
Oh
Go
no,
ahead.
I was just going to ask. So what is a rent? What is a ledger from when if you're renting?
So if you rent an apartment and you have a landlord, they're going to want to see it costs this much, you paid on this date. Costs this much, you paid on this date. Costs this much, you paid on this date. And so January, February, March, April, May, they're going to want to see a full year. It
Okay.
typically. Okay.
Okay. And then that could be similar to kind of like when you're with your credit, basically seeing that you paid on time and stuff like that, right?
Well, that's exactly what it is. It's your credit history, but most landlords don't typically report that to a credit bureau. And so you're going to have to get it directly from your landlord. And so again, the file, pay stubs, ID, um, landlord. Um, if you have anything abnormal on your credit, be prepared to have to give an explanation of what that
Could you
is.
go into what something could be that's abnormal?
Student debt, medical bill, something you haven't paid, something that is disputed, something that uh, went into your credit report and was resolved and removed. So you'll have to be prepared to explain any of that. Never over explain. If you
Okay.
answer, uh, if they say, or if an address doesn't match, um, don't say, oh, well, I got this over there, this over there, this over there. Just say, no, that's not my address. Or,
Okay.
or in my instance, when I moved to Virginia from another state, I used my guy friend's address until I got my own place. So they wanted to know if that, and I just said, no, I just had my mail going there. So I had to provide explanations like that.
Okay.
So be prepared to have an explanation.
And then I've heard that there are different types of mortgages that you can apply for. Could you go into that?
I'll go into that a little bit, but you have a conventional mortgage. You have 30-year, 20-year, 10-year, 15-year mortgage. That's just basically the duration of time which you're going to pay your mortgage. They have veterans, VA backed loans, where if you're a veteran and I'm not, the VA loans are different. I'm not a veteran and I didn't typically do those. That was another mortgage loan officer that would do something like that. But the VA, it helps veterans. It typically gives them more financial assistance towards down payments and closing costs and things of that nature. And then you have ARM, which are flexible rates. I'm not sure your ages, but ARMs can be a good thing and they can be a bad thing. They'll
So what
give you,
exactly is that? Could you clarify?
yes, an adjustable rate mortgage. Okay. So a conventional mortgage, you have that same interest rate through the duration of your mortgage, unless you refinance it or something along those lines. Unless you renegotiate your terms and switch and refinance for a different rate.
Okay.
The uh, ARM, adjustable rate mortgage, is they might give you a lock of a certain interest rate for 5 years, for 7 years, for 10 years, but then it's going to shoot up. And um, when it goes up, you have to be prepared for that adjustment. Or it could go down, but most of the time it's going to shoot up. A lot of people got into foreclosure difficulty with ARM rates back in 2008 because they were so low, so easy to buy a house with such a low ARM rate. When the rates jumped up, they couldn't afford their payments.
So would you say that it is very useful to like use that type of having a fixed rate, or fixed interest rate, but then maybe kind of paying trying to pay off most of your mortgage during that time period so that you won't have to pay it later when
I
it
wouldn't,
goes up?
I wouldn't say that. You'll find when you speak to any financial person about almost any subject, the answer is always going to be it depends. And it depends on everybody's individual situation. There's no cookie cutter response. Uh, Mr. Sergeant, Ms. Allen, your situations could both be different. You know, um, you might, this might be your forever home, and that's your plan. This might just be a home for you that's temporary. You only plan on staying in there 5 years, 7 years, and then you're going to sell it. And so everybody's situation is completely different. And so I can't say this is better for you or this is better for you.
Okay. And could you, so with that example you just gave with it being a forever home or not, could you talk about how that can impact my choice in what mortgage to use, and like how does that impact it?
So again, it depends. Um, the best example, if I plan on staying in this house for 30 years and I just want a fixed rate, me personally, and I just want to know that this is going to be my payment, I might go with the conventional mortgage. If I'm somebody who likes to move around a lot, and I just want the lowest rate, lowest payment for right now, and I don't care if it's going to go up later, or I want to pay, I might do an arm rate.
Okay. And then, so how long does it take for somebody who's in the pre-mortgage process? How long does it take to get approved for a mortgage?
So it depends, and it depends on a lot of things. One, did you get all the paperwork and all your responses back to the underwriter when they asked for it? Did it take you forever? That's why I said put everything in that folder and give it to them, because a lot of times they'll say, and these things are they'll say, I need your pay stubs, and somebody will take a week or so to give them the pay stubs. They'll say, I need your ID, I need this, and people take forever to get the underwriter those things. So it's helpful to me, again, to put it all together at one time. And it used to be about 60 days is what it took to close on a home. But now that's to finalize everything. But they sped it up during that market to like 30 days. If you weren't closing, if your mortgage company wasn't closing in 30 days or something like that, you might lose your house to another bidder, to somebody else who was bidding on the house who could close faster, because the folks were impatient. I mean, yes.
Just because of the market, more so.
Just because of the market, people were like, sell, 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 and buy, buy, buy. But right now, I'm going to say about 30 days. If you took advantage of one of those grant applications, it might take at least 45. It's going to take maybe a week or two longer. It's going to, some of the factors, it's going to depend on how quickly can they do your inspection. How quickly can they do the appraisal? Are there any questions? Did any hiccups come that they need a further explanation about? That could be on your side. It could be on the, it could be with the property. They saw something. It may not have appraised to the value. And so there's a lot of other things that come into play.
Okay. So based on the process that I know of, so basically you said you could do a financial assessment of yourself, you do the pre-mortgage approval process, or get a mortgage basically, and then next you would find a real estate agent. Or would you say that's the next step?
Yes, because most real estate agents these days, they want to know that you're approved and you have the money in the bank before they waste their time driving you around. They want to know that you're qualified for how much house. So they're looking for in that price range.
I wanted to step in and ask. So, when picking real estate agents, what do you want to look for exactly? This is a little side. This is going a little off to the side. But what do you want to look for when you look for a real estate agent? Who do you want to look into? I'm not saying as companies. I'm saying as when you're looking for that at that time.
Well, that's a great question, and I think a lot of people they make folly. They make a mistake by not getting the right real estate agent. There's a lot of different factors. Some realtors, they only want somebody who's buying a $500,000 or $700,000 house. If you're buying something in the twos and the threes, they might not give you the time and energy that you really deserve, because their check won't be as fat. You want to make sure that you have a realtor that's familiar with the area you're looking at. Okay. We are in the 7 cities. Hampton Roads is a large area, and you all will meet several people in this area. Some people are going to be more familiar with the city of Virginia Beach. Some people will be more familiar with the city of Portsmouth. Some people will be more familiar with Chesapeake here in these areas. So you want to make sure your realtor is familiar with that area. And then some realtors specialize in listings. They specialize in being the seller's realtor. And
So could you go in more into that?
And some realtors specialize in being a buyer's realtor. So some people are more interested, realtors, in representing the seller, and some are more interested in representing the buyer. And so those are the sorts of questions that you would ask and that you kind of look at their website, look at their, you know, look at their particular real estate agency and just see what type of realtor they tend to be. The other thing when you're looking for a realtor is there's NMLS. Okay, there's MLS listings, which is basically like you can get all the homes in a certain area, and they might have several. They might have a package for the South Side. They might have a package for the Peninsula, or they might have a package that you can purchase. Some realtors, some real estate offices, they buy every single one, so they know every listing coming to market. Some might only invest in one or two. And so those are questions to ask your real estate agent. Does that make
Okay.
sense?
Yes, it does.
Okay.
So basically, you want to make sure that your real estate agent knows the area. Would you say if I was trying to get a local real estate agent versus somebody who works maybe for a company, would you say that they would have the same resources as you were saying with the I don't really know the acronym you said, but the MLS something?
So most of the realtors here are contract employees for real estate agencies. So the real estate agency, they all tend to have different resources. So you've got, Century 21, you've got Better Homes, you've got Town, you had Rose and Womble, but I think they just merged with someone else. You have Exit Realty. So there's a lot of different realty companies, and they provide the resources to their agents.
Okay.
And so the agents work at the real estate company.
So after you've decided what type of real estate agent you want, what are the next steps you would say to get into this the next part of the process?
So after you get your realtor,
Yes.
so just you go to your realtor and tell them um, what you want in a home, what you're looking for. You want a ranch, you want a colonial, you want to live on this side of town, you want to live that side of town. Are schools important to you? What are the important factors to you? Do you want a pool? Do you want a yard? Do you want no yard? Do you want maintenance? Do you not want maintenance included? And so after you do that, most realtors, if they're going to dedicate their time to showing you around, they're going to want you to sign an exclusive agreement that they are going to be the only person you're working with.
Could you go into the importance of the exclusive contract? Because what is it? What like? Why would I want to sign one person versus a lot of different other people? Like, could you go into the benefits of that?
Well, it's not whether you want to, it's more of a benefit for the realtor that they're not wasting their time. Um, they might not, they just might not want to work with you if you don't sign an exclusive agreement with them. They probably just won't show you anything because if they show you something and you buy it with somebody else, they just wasted their money and their time.
So basically, it's like a contract to say, "Hey, I'll just do it with you. I won't do it with anyone else." So, can you back out of that contract?
You can. Typically, they're not long term. You might give them a month. I'm going to give you a month to help me find a house.
Right.
You can put things like maybe they botched the deal. They didn't put in your offer when you told them to. They didn't put in the price. Maybe like I said, it was a seller's market, and if a buyer's realtor didn't get their offer in right away, and another realtor got it in before them, they might have lost out. So those are the sorts of things. Maybe your real estate agent didn't disclose something to you about a property, and you found out later. So those are reasons you can. But when you have the agreement, you'll have the agreement in front of you, and you just have to read it and see what the terms are.
Gotcha.
Okay. And then when you're starting the home search, you can either do this with your real estate agent or yourself. What are the type of things that you want to look for when you're looking for a house? I know you said that you want to first look for different schools and like what is the area like, but what are some things I want to look for from an appreciation standpoint?
Well, I'm going to have to ask you,
Hmm.
what do you want to look for in a house? What do you want
Well,
to look for? What are you looking for when you buy your first house? What do you want?
Um, I don't know for sure. I would say probably like at least a 3-room house with like one floor maybe. I know I want it to be in like a good area, stuff like that. Maybe school nearby.
Okay. So you want a 3-bedroom ranch house. Anything else? Any other amenities?
A small backyard. I don't want to do maintenance.
Okay, small backyard. What about you, Mr. Sergeant?
mine would I it really depends because if I want the job that I want, I'll be moving around a lot. So if I'm by myself, I would probably want something similar, a smaller house, but with a bigger backyard because I love the backyards, definitely in a woods type area, like a little woodsy in the back, with close enough neighbors, like that community driven. But I don't think at this point in time I would want to be near a school.
Okay.
Although I do know that if you're near a really good school, the houses are probably also going to be a little upper in quality.
Well, good school system and a good being in a good school system tends to increase the value of your home. And having children in the neighborhood, a safe, good school that doesn't tend to increase the value of your home because families, that's what they want. Me, if you ask me what I'm looking for in a house, I'm looking for square footage. I'm looking for so many bedrooms, so many bathrooms.
It's
Um,
got to be two.
it's got to be 3. Um, and garage,
Oh
you know.
yes.
Yeah,
Um,
garage. Yep.
for some reason, Virginia is like against garages and basements, but I grew up in the Northeast in Connecticut. You had a garage, you had a basement, and it's weird to me that everybody parks outside here.
As someone who's mostly stayed in Virginia, I don't think I've ever heard of a garage basement. That is a new concept to
No, no,
me.
not a garage basement, but like a garage and a basement, or a garage, or
Oh, you're saying okay. So I have a garage and a basement. So, or my mom, my family does.
but I actually do have a friend that lives in Virginia Beach, and they have a sub. They have a sub, and it goes. They have like a 2. Yeah, it they go.
Wow.
That's interesting.
It's an expensive house.
Yeah.
And so, you might want an elevator. We live near the ocean front. You might take into account flood zones. You might want a raised house. You might not want to be in a flood zone. So, I mean, there's a lot of different things, but I want a big tub. You know, I want a large tub. I mean, it's just
Yeah.
everybody's different. Like, what are you looking for?
Mhm.
And a lot of times you'll start off with this is what I want, and hopefully you find it, but then towards the end you're making some sacrifices. Well, I'm getting this, but I'm not getting that.
Yeah. So
Right.
based on what you were just saying, so like I said, with my dream house, let's say that it was in an area where there was a flood zone, for example. I didn't really know that there was different zones and stuff like that. So could you kind of talk more about that? Like the different zones?
Well, there's not actually zones per se, but some houses are in more flood prone areas. And if you're in more of a flood prone area, your homeowner's insurance will be higher.
So is homeowners insurance something I have to buy for my home as well? Is that something I could possibly go without?
No. If you have a mortgage, your mortgage company is going to require that you have homeowners insurance. And if you're in an area that's prone to flooding, in addition to that, they'll also make you have flood insurance.
Oh well, so there's no negotiations on it. You have to have it.
Yes.
So I assume that goes for tornado areas, areas that get a lot of heavy rainfall, just areas that are prone to a lot more exposure to natural disasters, probably like places where forest fires would start randomly or
right? I don't think they have a tornado policy, but if you live in one of those areas, it's just going to be factored into the insurance rates for that area.
right.
So what? How would I go about getting homeowners insurance? Would that be a part of, like, would that already be included with the mortgage, that so I don't have to look for it, or is that something I'd apply for on my own?
That's something you have to shop for separately.
Okay. And so if I have to factor in homeowners insurance as well in the process of me trying to buy a home, then would you say at the very beginning that's something I also need to add into my calculations? And how exactly can I kind of add that in?
Yes. So when you, again, like I was talking earlier, if we Google, we go to Bankrate or something like that, or one of those programs, it'll estimate what they think your homeowner's insurance is going to be. It'll estimate what your taxes are going to be for that zip code. Um, it'll estimate if you have to pay any extra insurance like PMI, which is principal mortgage like protection. It's protection for the mortgage company based on your score and based on how much you owe on the home. Um, but so yes, that's typically when you're pricing how much home can you afford. You're not just looking at the mortgage, the actual mortgage cost. You're looking at the insurance and the taxes also.
Okay. And so after, is there any type of ways that I can cut costs on buying a home? Like any type of ways I can kind of find a way to kind of cut it, cut costs?
Um, buy a foreclosure, buy home auction. Um,
So what is a foreclosure?
a foreclosure is a house that somebody else owned that was taken by the bank because they didn't pay.
Oh, okay.
So um, it's like having your car repossessed, but then that car gets sold back to somebody else.
So
So
sorry, I didn't mean to interrupt.
that's okay.
So you can take someone else's house
No,
and then
you can't.
you can't.
You
The bank will take someone else's house and then they can sell it to you.
correct,
Okay, and that might cost less.
correct.
That's interesting. I didn't know. I thought when you foreclosed the house, it was like I didn't. That makes sense. No, that makes sense.
And it's interesting that we even kind of got to this because I was just talking to my mom the other day, and we were talking about how the way I had heard about if you are paying for a home and you're paying the mortgage, but you end up not having, you're not paying the mortgage anymore, or you're not going to, you're not don't have the money to pay for it anymore, then how the bank or they can take they can take your home from you because technically it wasn't paid off anyway by you, so you don't own it. So you're referring to that process, right?
Yes. So basically, let's say you become ill or you lose your job or something happens and you're no longer able to keep up with your mortgage payments and you've gone through a period of time 3 6 months where you haven't paid your mortgage. The bank can come in what's called foreclose on your home. They can take your home back because you haven't paid. It's like if you bought furniture at a furniture store, maybe you're renting, or they can take the furniture back, or I mean, or they can take you to court for the debt. But in the home process, they foreclose for people who defaulted. They call it defaulting on your mortgage, and the bank takes possession of the property. They call it REO, or their bank the bank owned properties now, and the bank might sit on those homes for a while, or they auction them off, or they list them with a realtor and just try and get as much as they can. A lot of times, the bank doesn't have to charge you as much. Sometimes they just want to get rid of it quickly. Sometimes the person probably paid a huge chunk. The bank might have already made their money back. So now they're just trying to make some more because it's the bank. And
Yeah.
yeah,
So what would you say is if I'm a little bit late on my payments, what would be the good grace period you would say the bank would probably give me to even pay?
I really I can't give that to you because it changes based on where the economy is at different points in
Mm.
time. You know, sometimes they're quick to foreclose. They might have legal, and then economic policy, whoever's sitting in the office, sometimes they're friendlier to consumers, sometimes they're stricter. So they might change it back and forth. Okay, like you can't touch it for 3 months, can't touch it for 6 months. During the pandemic, they had a thing which was called a moratorium, where nobody could foreclose and kick you out of your home. It was just suspended for a long time.
I did hear about that, and I believe that they also did something similar for renters as well, where they couldn't, where people who are renting couldn't get kicked out of their homes for not being able to pay.
Right? They couldn't get evicted from their home for non-payment for a certain period of time. So there's all types of things that I can't. That's why I can't give you a set, cut and dry answer. But yeah, let's say if you don't pay your car note for 3 months, it's going to get repossessed. Your home is probably going to be longer than that. Repossessed, meaning they take it back from you. They take the car. They You hear somebody, they're like, oh, they repossessed my car. They didn't pay. Somebody came, tow truck in the middle of the night and stole their house. It's not gonna happen.
Mm-hmm.
I mean, stole their car or took their car with whatever was in there. The home foreclosure process is not the same. There's more legality involved, but it could be sometimes if you're working with somebody shady.
Okay. So, from my understanding, once you found your home, and I believe, would you say the inspection process is next? Kind of getting the home inspected after you found the one you wanted?
So after you've got your realtor and your realtor has then put in the bid and the offer is accepted by the seller, you guys, the seller and the buyer, they've made a contract that they're agreeing to sell it to you, you're agreeing to buy it. You put down earnest money. Basically, you put down, uh, maybe $1,000, $2,000, saying you're going to buy the property. Good faith money. We call it good faith or earnest money.
We have the same
And
here for school. We have to put
right,
down our $300 housing deposit.
yeah. So you put down a deposit that could go towards your closing costs, or if something doesn't work out, you might get the money back. If the seller decides, I don't want to sell the house anymore, because they can do that. Or you find a defect in the house when you can get the check back. But it's good faith that you're really interested in moving forward with this home, okay? And because they might have other people looking, and if you back out, then they lost these other people who might have been interested. And so once you found the home that you want, then you go back to the mortgage application and you tell the bank, this is the home that I want. And they'll make you probably submit all those papers from the beginning all over again, your bank statements. They're going to want to check and make sure nothing's changed. So they're going to want all that information again. And then the bank will order your credit report. They will order the home inspection. Or you can choose the companies. They might give you a choice. They might use well, sometimes you have to use the bank's company. You have to use their appraiser. Okay. Um, but so the bank will order all those things. They'll order somebody to go out and appraise the property. You can choose your own home inspector, but the bank will order their own appraiser. And
Okay.
so that's done by you pay for it, but they are the
Wow.
one choosing. You pay for it. Bank's not doing it for free, but you
Of
use their
course.
company. Mhm.
So, based on what you were just saying, then, so basically, the next step from buying a home, like from searching for a home, would basically be to place a bid. And so, could you go into what the process
Placing
could
an
be?
offer. We call it placing. If you're buying it with a regular person to person, it's called placing an offer. If
Okay.
you're going to an auction or something along those lines, then it's really a bid. I mean, they could be interchangeable, but they're really, that's the term that people would be familiar with.
Okay. So, if I'm placing an offer and there's several other people who are also placing an offer on the same home, could you talk about would that be considered a bid war in a way?
Yeah, if they're going back and forth, and you say I'll pay 320, and he says I'll pay 325, then I say I'll pay 340, and then we go back and forth. Yeah, that could be a bidding war,
Okay.
and that is dangerous sometimes because you don't want to buy a house for more than it's worth. Because if the house is really only appraises at 320, and you want it so bad, and you say 340, the bank's only gonna get might only give you the mortgage for that, or you might have to come up with that extra money and pay cash on top. So, or you can wind up upside down or underwater. You can wind up if the home price drops to
Could you
300.
go a little more into that? Like what you mean by that?
So, if a home value they say it's 320, the home value is 320. Why would you pay 350? Why would you overpay?
Yeah.
I mean, like again, that really has to be your forever because you lose, you get your cash caught up. You lose equity. I would when I bought the homes before, I told you I looked at foreclosures and auctions and things of that nature because I bought homes and I had immediate equity in the home. That means I immediately had a house worth, say, $200,000, but I only paid 150. So that means I had $50,000 of equity in my home.
Okay.
If you buy a house and it's worth 300,000, but you pay 325, you're negative the equity. Does that make
So you're not
sense?
getting anything back from your home.
Well, I mean, you're not getting back, but let's say,
Like the
okay,
yeah, the equity, I mean.
right.
Okay.
So I wanted to jump in on that. So let's say you get stuck in that. You found the perfect house and you get stuck in that little war. How far do you think you should go up? Like say like 10,000, 20,000, 30,000, before you should take a pause, look back, and maybe drop out? Because you
That's
said don't
that's
go
up
high.
to you. That's
Yeah,
up
I would
to you.
think yeah, I
That's
think
up
I
to
would
you.
stop when I get to the value of the house. I don't think I'll
That's
go any farther.
that's up to you. You know, it's like for me, it's like going on eBay sometimes. You know, people get so excited about bidding on eBay, they pay way too much for
Right.
something. I mean, it was listed for $5. Why are you paying 20? Pay the $5. You've got to be able to walk away. Unless you just really want to. It's got the woodsy backyard and you just want it and you couldn't find anything else like it. So it's really up to you.
Makes sense. Makes sense. Yeah, I think I'd stop at the line too. I just wanted to know if it would be okay to pursue just a little bit, just to dip it in a little bit. But if you back out, will there be any penalty?
Not if you got not unless you sign the contract. Not if you're just a bunch of people bidding. You don't have a penalty until you have signed the contract with me, and then you back out. When people are bidding, it's just and even you might have the highest bid, and the seller likes her better, and so they sell it to her. There's a lady in my neighborhood who sold her home because she was older and whatever, and they had so many memories, and it was a new family. It was a husband and wife, and she just thought they were cute, and she just pictured that family in the house and not the other guy who she thought was grumpy.
I've heard stories about people picking the what was it? I think it was one of my favorite stories. Was the guy, he picked the young police officer and his family because they were new, they didn't know the area. He just moved there because they seemed like a nice family compared to like someone who offered them $100,000 more than the house was actually worth. At the time, I thought that was, you know, wow, that's a lot. But I get that
Yeah.
you have the choice. You have
Yeah.
the choice.
The seller can sell it to whoever they want to.
Okay.
And it might not be the person it might be the person who was the easiest to work with. You know, the person showed up on time and signed the you know what I mean? Like
Yeah, they did all the
they always had to wait
the
for
work.
it. Mm-hmm.
Cool. All right.
So we talked about appraisal already, but could you talk about what is a title, like a title search? I ended up finding something else about that, but I wanted to know if you could talk about that.
Yeah, absolutely. So I actually have a really good friend. One of my great friends has a title search company in Virginia Beach, RS Settlements. I'll give them a quick plug. And but they basically do title search and title insurance. And I've sat in there, so I've seen the entire process. But the title search is making sure that the person you're buying the home from really owns the home.
So it's kind
Okay,
of like it's kind of like having a title in your car, right?
right? And it really makes sure that you're the owner of that house, or that there's not another family member. We see that houses that have been in family for a long time, and that might have been owned by grandparents, and they passed along, and they don't really know who the owner is. Or there might be 5 or 6 people are the owner, and 4 agreed to sell, and 1 didn't. And so, a title search is to make sure that there's no other liens on the house. That even though that person might be the owner, but no creditor also can lay claim to the house. So that's what a title search is for. Make sure the person selling you the house really owns the house. And sometimes
Okay.
those are really easy, and sometimes they are difficult.
So could you talk about like how it could be easy or how it can be difficult? Like, do you mean just finding out the people who live in the house or who own the house?
Yeah, sometimes it's easy and sometimes it's difficult. If it's a brand new house and it was built 5 years ago and I'm the only owner, and then I sell it, yeah, I mean, it's really easy to find out that I was the owner. But if it's a house that's been in somebody's family for 100 years and it's never been sold, it's just been willed and willed and willed, that might be difficult to find out. There's a gentleman that passed away, and he wasn't married. And so all his siblings were fighting over the property. My friend at RS done this title search, and lo and behold, she found out this guy had a daughter. Nobody in the family mentioned the daughter. Nobody mentioned the daughter. And they're like, "Oh, well, she's estranged from the family." But guess what? She was the legal owner. She was the one who was entitled to the property. Either they hadn't seen her, they hadn't heard from her, nobody wanted to mention her, but guess what? So it can be easy and it can be difficult.
I just want to pause. If she was able to come back, would she be able to claim that house? And there is nothing they can do about it, no matter what they do for it.
Well, that's why you do the title search. You have to make sure the title search is clean. And so that can be difficult. And when it's difficult, it costs more money for a title search. But then you have title insurance. Okay. So you have the title search, and then there's title insurance, just in case there's a mistake or an error. You find out there's a lien, or somebody else had a claim or bill, or taxes were owed on the house. So you have title, title search, and title insurance, 2 separate things.
Got
So would you say getting a title search is basically mandatory, or could you choose?
Those things are going to be requirements from if you're getting a mortgage from, yeah, they're going to be required. They were even required for me when I bought the house from an auction.
Okay, so you just choose basically where you want to get it done from.
Correct.
Okay. And so basically, next, I would think that you're basically the next step of the process is basically closing the home, correct?
Yes. And so when you're doing the closing, well, you'll have a closing meeting, closing costs, and all of those things. So when we talked about the home purchase, you have the down payment and then you have closing costs. The closing costs are going to be made up of all those other things: the title search fee, the title insurance, which is usually a one time fee, the deed, the fees that go to the bank, any legal, just so you'll have all those closing. That's what's closing costs. You might have to pay if you have a homeowners association. You might have to pay so much up front to the homeowners association. That's not always the case. You might have to pay so much in the taxes up front because the other person may have paid their taxes for the year. You've kind of got to so there's going to be a lot of that. That's typically they should send you your closing cost sheet. I believe they're required to send it to you at least 5 days prior to closing for you to review all the costs and everything.
So basically, your closing cost is a combination of everything that you paid for during the housing process.
Correct. Minus anything you already paid out of your pocket up front.
Okay.
But it will still be on the balance sheet, all the different closing items, and it'll still be like let's say a long Excel sheet. It's not really, but you'll have all the columns with all the different items and everything like that.
Okay. And so I remember you said something about a homeowners association, and I know from what I heard is that when you buy a certain home and it's within a certain area, that is it's mandatory, right? If you live in a certain area and you want to buy a particular house.
So um, I'll go back to the example of James. James buys a house out in deep in Chesapeake where there's no, just some property in the woods, and he's by himself out there. He probably doesn't have a homeowners association. Or if you go into this inner part of Chesapeake, all the different homes tend to be clustered together. There might be the Deep Creek. There might You might have River Street, and it might be 100 homes, 10 homes, and they might have a pool or a tennis court and things like that, and common areas. Those areas typically have a homeowners association fee, or they could be condominium associations, even standalone. But the association is responsible for the grounds. They're responsible for the garbage pickup. They're responsible for the pool. And so that's typically, if you live in that type of organized community, that's what the homeowners association fee is.
I was gonna ask, oh, sorry. I was gonna ask, would it be okay? Do you believe that being in an HOA is a lot better than not being in an HOA? I've heard horror stories about HOAs, but I've never fully understood them because I'm 21. I still live with my mom when I'm not at school. So we live in an HOA, and it's not been terrible. It's not been bad, but I've heard some of the bad things. So
It depends. It depends. You could live in a healthy neighborhood. You can live in an unhealthy neighborhood. A healthy neighborhood is everybody gets along. You have an active board of directors. They're doing what they're supposed to do. An unhealthy neighborhood is um, basically everybody's late on their home on their and so your services are going downhill because everybody's late paying their dues or their fees. Or you could have a board of director that's a pain in the neck. You could have a nosy neighbor. So um, there's there's a lot of different things. So
I do want to preface the last thing I want to ask before we go ahead and start to close this down. Your land, or not landlords, apologies. Your realtor has to let you know about the HOA before signing any contracts beforehand on getting the house, correct? I
Oh,
know,
yeah. There's so many things your realtor is supposed to tell you before buying the home.
right.
Your realtor represents you. The other person's realtor represents them. They have a duty to you. So they have to tell you anything that they find unfavorable about the property. They have to tell you, and yes, they would have to tell you about the HOA, and they would have to give you what they call it, homeowners docs or
Right.
condo docs or documents that detail all the rules and regulations of beforehand. They would have to give that to you also.
Right, right. I know there's always those jokes you see on some ads or in some TV shows where they're like, and this is where they found the bodies, and this is where you saw this, or this is where this happened. And those people, they definitely do something bad. So, I
That
just
really happens. Yeah, that home has ghosts.
I wouldn't buy a home with ghosts. Although that does sound like every night would be interesting. But me personally, I like to sleep and I don't get a lot of it, so I'll be fine. So I'm gonna go ahead and we will go into the ending. I know Jalea had a few questions, but she had to go out for a moment, so I'll go ahead and end it. Um, just a little standard question. Knowing what you know now, what would you tell yourself going back before you started your adventure? Let's say you're back when you're 21, about to leave.
There's just two things that I wish you guys had asked me that I didn't mention.
Oh,
Um,
go ahead and mention it.
so, um, credit score. What's the minimum credit score you can have? You can, to buy a home. I
Mhm.
mean, really, it again varies. Sometimes the minimum is 550. Sometimes it's 650. But that somebody might could sell you. Somebody might sell you a home if you have a 600 credit score.
Mhm.
But a 600 credit score versus 720 might be a whole interest point or 1.25% interest difference. And what that means is the lower your credit score, the higher the interest they're going to charge you. So on a $350,000 house, let's say the average mortgage rate right now is 7.3 or something. But if that's for ideal credit, if you have less than ideal credit, it's going to be 8.3. That might be the difference of $300 a month in your payment.
Hmm.
So that might be the difference of $3,600 a year. So
Interesting, interesting. Yeah, yeah. That was actually really good.
yeah.
I hadn't thought of asking that before.
And then a lot of times people are gonna you have friends. You have friends, and but this isn't a relate. Hey, this is important. That person who sells you that house, that bank that sells you that house, you're one and done, and then they've forgotten about you, and you're locked into that baby for 30 years, 20 years, 10 years. So just go for the company that offers you the best terms.
Okay.
You know,
Right.
online or in person, whatever companies are going to offer you the best terms, it's about your pocket, your money at the end of the day.
That's I also never really thought of that. I mean, yeah, of course you want to go for the best,
Yeah.
but
Yeah.
yeah, that's definitely. Oh, there she is. She's back.
I'd love to choose my buddy.
Hi.
Hey, I'd love to choose my buddy.
Right.
But if my buddy has, it's just one of those things. Like if I'm buying, um, I don't know, if I'm buying groceries from a store that one of my friends owns versus something else, I'll pay a little bit more money for my friend. I'll pay
Right.
money for that relationship. I'll pay a little bit more money. But when it
Right.
comes to the house, there's no relationship after you buy the house. So,
Right.
um, you know, So I probably, in those circumstances, I'm just going to look at the numbers.
All right.
Actually, I have a really quick question, real quick. Just to get back to what I had to ask. I just want to ask, was there any type of thing like, so I did hear that when you're buying a home, after you bought a home, there are sometimes credit card offers that are sent to you. Would you recommend applying for any of those?
So, very good question. When you are going through the home buying process, do not buy anything until you are done with your home closing, because they're going to run your credit again right before you close. And if anything new comes up, you're basically going to put a full halt and pause, and they're going to want to know what is this, and it can change your debt to income. Okay. But then once you buy the home, you will see that a lot of other things, once you become a homeowner, things will drop, like your car insurance rates will drop. That was surprising to me. They're like, oh, you're a homeowner now. You're responsible. And then so different rates on other things will drop.
Okay.
Yeah, you'll get credit card offers because now you've got a home. Maybe you've got some equity. It shows that we're on the up and up. We're building equity versus paying it out to a rental company. When I was looking, I mean, rent is crazy right now. People are paying $2,100 to live in a 2 and 3 bedroom apartment that you don't have any equity, you don't get any tax write-offs on or anything like that. But once you start paying that, I think it was 350,000. You have a credit score of 720. You put down a down payment of 35. I think you're looking at it $2,400 a month payment versus paying for, but then you're getting the equity. It's paying down, but you're building up cash in your house versus rent. So yeah, so you'll get more offers and things of that nature.
Right.
Thank you.
Okay. Did I answer all of your questions tonight? Was I clear?
Yes.
Yeah,
Okay.
very much. And you added the other 2 questions, which was something that personally I think was a lot more important than I previously had thought. So thank you for that as well.
No problem.
Yeah, so that would be the end of our thing. I want to thank you for coming on to the podcast.
Absolutely, anytime.
And you are welcome to come back anytime, Cheryl. Very happy to have you this time.
Okay.
Yeah, and for everyone who is watching, this is Financially Fierce. We have a LinkedIn and not yet the Discord. The Discord is coming. But we have a LinkedIn and an Instagram at Moneyversity LLC. You can find us there. You can also, like and subscribe and always follow us. Put that notification bell on. And we will see you again later. Thank you for coming.
Thank you, Jalea. Thank you, James. Have a great one.
You as well.
If it doesn't make money, it doesn't make sense. Bye.